Question number 1. What is the objective of a review of the interim financial information of a public issuer entity? Letter A, to provide a basis for reporting whether material modifications should be made to conform with GAAP. Letter B, to provide a reasonable basis for expressing an updated opinion on previously audited financial statements. Letter C, to determine whether summary or pro forma information should be included in a registration statement. Letter D, to determine whether the financial statements are presented fairly in accordance with GAAP. Correct answer is letter A. Explanation. Letter A is correct because a review only aims to flag whether the interim information needs adjusting to conform with GAAP, not to fully vouch for it. That's a much narrower goal than expressing an opinion on fair presentation, which is what an audit does, not a review. Question number 2. A modification of the CPA's report on a review of interim financial statements of a publicly held company would most likely be necessitated by which of the following? Letter A, an uncertainty. Letter B, a lack of consistency. Letter C, reference to another accountant. Letter D, inadequate disclosure. Correct answer is letter D. Explanation. Letter D is correct because inadequate disclosure is a genuine departure from GAAP, and that's exactly the kind of issue that forces a modification to a review report. A mere uncertainty, a consistency question, or referencing another accountant's work don't rise to that same level in a review engagement. Question number 3. In a review of interim financial information, which of the following would the accountant typically not perform? Letter A, reading the available minutes of the most recent stockholders' meeting. Letter B, applying financial ratios to the interim financial information. Letter C, making inquiries of accounting department management. Letter D, confirming major receivable account balances. Correct answer is letter D. Explanation. Letter D is correct because confirming receivable balances directly with outside parties is a substantive audit procedure, well beyond what a review calls for. Reviews rely on inquiry, analytical procedures, and reading available records, not on that kind of direct outside verification. Question number 4. Which of the following is least likely to be a procedure in an accountant's review of a public entity's interim financial information? Letter A, comparing disaggregated revenue data by month to the prior interim period. Letter B, reading available minutes of stockholders' meetings. Letter C, observing the counting of physical inventory. Letter D, inquiring of management about significant journal entries and other adjustments. Correct answer is letter C. Explanation. Letter C is correct because physically observing an inventory count is hands-on audit fieldwork, not the kind of desk-based inquiry and analytical work a review is built on. The other three, comparing revenue trends, reading minutes, and inquiring about journal entries, are all typical review-level procedures. Question number 5. Under what condition may an auditor report on summary financial statements that are derived from a complete set of audited financial statements? Letter A. The summary financial statements are distributed only to those who also received the complete financial statements. Letter B. The summary financial statements are audited by a different auditor than the one who audited the complete statements. Letter C. The auditor also audited the complete financial statements from which the summary was derived. Letter D. The summary financial statements omit substantially all disclosures required by GAAP. Correct answer is letter C. Explanation. Letter C is correct because the auditor reporting on the summary needs to be the same one who actually audited the full set of statements the summary was drawn from. Without having done that underlying audit, there's no basis for the auditor to vouch for how faithfully the summary reflects the complete statements. Question number 6. An accountant's review report on interim financial information is included in a registration statement. What clarifying statement should the prospectus include? Letter A, that the review report is not part of the registration statement under the Securities Act of 1933. Letter B, that the accountant assumes no responsibility to update the report for later events. Letter C, that the review was performed in accordance with standards established by the SEC. Letter D, that the accountant obtained corroborating evidence to determine whether GAAP modifications were needed. Correct answer is letter A. Explanation. Letter A is correct because this is specific, required boilerplate. The prospectus needs to make clear that the review report doesn't carry the same legal status as the rest of the registration statement under the 1933 Act. This matters because a review provides far less assurance than an audit, so investors shouldn't mistake it for one. Question number 7. A CPA is engaged, separately from any audit of the complete financial statements, to audit only an entity's schedule of accounts receivable and its schedule of royalties. May the CPA accept each of these as a standalone engagement? Letter A, schedule of accounts receivable, yes. Schedule of royalties, yes. Letter B, schedule of accounts receivable, yes. Schedule of royalties, no. Letter C, schedule of accounts receivable, no. Schedule of royalties, yes. Letter D, schedule of accounts receivable, no. Schedule of royalties, no. Correct answer is letter A. Explanation. Letter A is correct because a CPA can audit a specified account, schedule, or element of financial statements as its own standalone engagement, completely apart from any audit of the full financial statements. Both the receivable schedule and the royalty schedule qualify equally for this kind of specified element engagement. Question number 8. An accountant's review report on the interim financial information of a public entity is most likely to include which of the following? Letter A. A statement that the information was examined in accordance with PCAOB standards. Letter B. A statement that the interim financial information is the responsibility of the entity's shareholders. Letter C. A description of the procedures performed in a review. Letter D. A statement that a review is less in scope than a compilation. Correct answer is letter C. Explanation. Letter C is correct because, unlike a standard audit report, a review report actually describes the procedures the accountant performed, since the reader needs that context to understand just how limited the assurance being given really is. The information is management's responsibility, not the shareholders', and a review is actually greater in scope than a compilation, not less. Question number 9. An independent CPA has reviewed the interim financial statements of a public client. Which procedure is least likely to have been performed? Letter A. Obtaining written representations from management covering all interim financial information presented. Letter B. Observing the interim physical inventory count. Letter C. Reading the financial statements for obvious material misstatements. Letter D. Performing analytical procedures related to sales. Correct answer is letter B. Explanation. Letter B is correct because observing a physical inventory count is a hands-on audit procedure that goes well beyond what a review calls for. Obtaining representations, reading for obvious misstatements, and running analytical procedures on sales are all right in line with what a review actually involves. Question number 10. Which procedure would ordinarily be applied when an independent accountant conducts a review of a public entity's interim financial information? Letter A. Verifying changes in key account balances. Letter B. Reading the minutes of Board of Directors meetings. Letter C. Inspecting the open purchase order file. Letter D. Performing cut-off tests for cash receipts and disbursements. Correct answer is letter B. Explanation. Letter B is correct because reading board meeting minutes is a standard inquiry-based step in a review, aimed at catching anything discussed at the board level that might affect the interim numbers. Verifying account balances, inspecting purchase orders, and cut-off testing are all more detailed audit procedures that go beyond a review's scope. Question number 1.